Welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for analyzing and identifying digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here's some notable token price movements and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. All right, guys, we're in October. It's the start of the fourth quarter of the year, and things are definitely getting a move on. If you've missed it, the Sam Bankman-Fried trial started yesterday. Definitely been some juicy tidbits out of there, although there's definitely been a back and forth about whether crypto people still care about this or not. I'll let you answer that. The Ripple's acquisition of Fortress that I talked about 2 weeks ago also just fell through after it came to light that Fortress actually lost $15 million in customer assets through theft. Not great news for a custodian. Anyway, but I have some really cool stuff to talk to you guys about this week. As I said, it's definitely been an exciting one. So let's jump right in. So first we shall talk about STRD. So STRD is the liquid staking protocol of the Cosmos ecosystem. And just for a little bit of background for people who aren't familiar with Cosmos and kind of how they operate. Unlike other kind of layer one protocols where you have a base layer such as Ethereum, and then you have a liquid staking protocol such as Lido on top of that, in this case, Cosmos has this like app chain model where they act as the hub on their own chain, but then projects that have really specific use cases can spin up their own chain using Cosmos's infrastructure, using their security, and they can kind of plug into it. It's called a hub and spoke model. So Cosmos is the hub, other app chains are the spokes. So STRD is one of those projects. It's been around for about a year now. But they put out a proposal earlier today to actually merge their project essentially with Cosmos, and they'd be swapping their native token, STRD STRD, for the Atom token. So this is pretty interesting. It just came out this morning during Cosmos's Cosmoverse conference, which has been going on the last couple days. The proposal outlines decentralization as its reasoning for why they would want to effectuate this, basically. They said the STRD token, which currently serves as governance token, would be replaced by the Atom token as the governance token. And that would just still govern the STRD chain. But the idea would be is that by doing this, there would be more decentralization of the protocol and of kind of, all decisions around that. So there's no details in the proposal around the price of the buyout, where the Atom tokens would come from this, since Atom, unlike a lot of other projects, doesn't have like a giant treasury that's flush with tokens. Some initial feedback on the proposal from the STRD community has been negative, tepid maybe. But this proposal did come from the STRD team. So we will see if this does get pushed through or not. So like I said, it just came out this morning. This is a developing proposal, but could be potential really interesting M&A opportunities, particularly as we haven't really seen a merger and acquisition by a layer one of a smaller protocol. STRD is down 3.7% for the week, likely not to do with this news, but we'll keep you guys updated as we go. Okay, next up, we're going to actually talk about Ethereum. Big surprise here. But if you missed it, last Thursday, the SEC approved the first Ethereum futures ETF from Valkyrie Investments, along with a slew of additional ETFs from VanEck, ProShares, and Bitwise. These ETFs all went live on Monday. Interestingly, VanEck also announced it was going to donate 10% of the proceeds of its ETF to Protocol Guild, which is a collective of Ethereum core contributors, in order to support the continued development of Ethereum. So for most of you that don't know, a lot of later stage projects that are decentralized like Bitcoin, like Ethereum, a lot of them really depend on grants and open source developers who just decide that they want to contribute to the protocol. And it's actually really hard to get paid as a developer on some of these projects. Bitcoin more so problematic than ETH. There's a lot more like grants available for ETH. But a lot of people are definitely applauding VanEck's move to kind of, support Ethereum, not just by, increasing the price of the asset, but also giving back to kind of some of the community groups that support the protocol. So Ethereum initially rallied about 5% on the news of the approval, but it has since retraced and is up 3.6% for the week. All right, next we're going to talk about GMX, which I've talked about a few times here. But as a refresher, last week we actually talked about layer 2 protocol Arbitrum, and they were kind of having some heating. There was some heating up of activity there because they have a new round of grant proposals out where projects can apply and say, hey, I would like X number of tokens to use as incentives on my project. So already the program's seen a ton of interest. They've gotten over 150 million, ARB tokens worth of proposals. So people have proposed to have, all kinds of stuff, but they only have about 50, they've basically got a lot of interest in 50 million ARB tokens. So notably, the decentralized derivatives project that was launched on Arbitrum, GMX, submitted a proposal for 13 million tokens, which is just under the 25% available total. GMX has struggled recently following their V2 upgrade, and they've continued to lose market share. The market share lead that they had kind of started to establish late last year, early this year. So a lot of people are very excited by the idea that GMX will likely be granted this Arbitrum grant, and in exchange, they will be giving out those ARB tokens as trading incentives, which could hopefully increase their KPIs. Just as for context, GMX currently accounts for less than 10% of the overall decentralized derivatives volume, and is down from a high of over 30% back in November 2022. So with this news, GMX is up 8.2% for the week. All right, last we're going to talk about Rollbit. Rollbit is a blockchain-based casino project. They announced yesterday that it moved its token to a bot. It moved its tokens buy and burn on chain, giving market participants much more certainty around their revenues and burns. So Rollbit launched in 2020, but has gained prominence at the beginning of this year by signing a number of Twitter personalities as partners. The project offered leveraged crypto trading up to 1,000x, slots, blackjack, and other card games, along with sports betting. Anywhere from 10 to 30% of revenue, depending on the business line, is kind of flows to this buy and burn model for the RLB token. As of today, the buybacks are now verifiable on chain in a bid to promote transparency. Awesome job for them. With this, Rollbit's up 41% for the week. All right, that's all I have for you guys this week. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.